Question number 2, John Murphy. We have 8 transactions relating to the year 2015 for John Murphy, and they're listed out at the top part of the question. And then the requirement of the question, and I'd always advise to read the requirement before starting into the question. Part A is to answer the transactions in the relevant ledger accounts, B is balance off the T accounts, and C is extract a trial balance as at the 30th of June 2015. This is exactly the same style of question as question number 1, which we previously looked at. Okay, so starting off, we are told that the following transactions are from the records of John Murphy for June 2015. The first one is the 1st of June. John started a business with €200,000, which was lodged into the bank account. So generally, whenever a person is starting a business, they'll invest money into that business. So the money element of that is going to give rise to an asset. So we're going to set up a T account for the bank, and that money that they invest into the business is referred to as capital or equity. So the 1st of June, John started the business with €200,000, and that was lodged into the bank account. So that give rise to an asset. You always debit your assets. So on the 1st of the 6th, capital €200,000. So that represents that there, at the end of the 1st of June, there's now €200,000 in the bank account. And the corresponding entry for that is in the capital account. 1st of June, bank, €200,000. And that is the first transaction. Okay, so on the 2nd of June, John bought new office furniture by cheque for €30,000. So when you see it's by cheque, that means there has been an impact on the bank account. New office furniture is an example of a fixed asset. It's an asset that the company owns for the purpose of the business. So we will now open an office furniture account. So the purchase of the new furniture of €30,000 gives rise to an asset. An asset is a debit balance, so that will go in as a debit balance into the furniture account, and it was paid for by cheque, which is by the bank. €30,000, that is a debit balance. For every transaction, you need to have an equal and opposite transaction. So for this transaction, it's the debit the office furniture account, and the credit side of that will represent a reduction of the bank balance. And when you're reducing your bank balance, it is a credit entry. So it was paid for by cheque. So we are reducing the bank balance that is in the business now. So on the 2nd of June, a cheque was issued for office furniture, €30,000. And we've dealt with the first one, and now we've dealt with the second one. And I'd always recommend ticking them off as you go along, so that you know that you've everything dealt with twice. So on the 8th of June 2015, the business purchased goods by cheque of €20,000. So there's two parts of that. They bought the goods, they purchased the goods, and they paid for them by cheque. So there is going to be an impact on the bank account. So first up, we are going to open a purchases account. Purchases is an expense, and you will always debit your expense accounts. So on the 8th of June, purchases were acquired by cheque. So you will be making reference to the bank for €20,000. And again, because you've paid for those purchases by your cheque, you are reducing your bank balance, you're reducing your cash balance, And you see in some questions, cash, it could be called the cash account or it could be the bank account. It's generally the same thing. So on the 8th of June, you made purchases of €20,000. And that is the third one dealt with. So then on the 12th of June, you've sold goods. So you've made a sale, you've sold goods for €35,000 and you've received the payment by check. Therefore, your bank balance is going to be impacted. So you've made a sale. So you open up your sales account. You always credit your income. Oh, it's your sales account. You credit your income, and your sales is the main form of income you will have. And because you received your payment by check, you will be recognising the debit side of that transaction in your bank account. So on the 12th of June, 12th of June, you received a check in relation to sales for €35,000. That is on the credit side, and you will be receiving money into your bank account from that check. So you'll be increasing your cash balance and therefore increasing your bank balance. And that is that one completed. Again, tick them off as you go along. Then on the 15th of June, the business paid rent by check. So rent is an expense and check, therefore the other side of the entry will be impacting your bank. So the transaction should give you hints on where the two sides of the transaction will be. Rent is an expense. So you open up your rent account and you debit your expenses. So you will be debiting your rent account for the 15th of the 6th, and your bank will be, the amount is €2,000. You will be reducing your bank account by that €2,000. So the 15th of the 6th, you'll be identifying it as rent, €2,000. The idea being, when somebody looks into your accounts, is when someone looks into your bank account, they will recognise that the business paid €2,000 in rent by the description. They'll also look into the rent account in the general ledger and see the corresponding side of that in the rent account. And that is the transaction relating to the 15th of June completed. The 25th of June, the business purchased goods by check. So again, this is similar to the one that was done on the 8th of June. You have a purchase and the money was paid by check on that date. So on the 25th of June, 25th to the 6th, you have the bank, 24, oh, excuse me, €24,000. And again, straightforward, you'll credit your bank. And you should always leave sufficient space for your T accounts. So that is the transaction for the 25th of June completed. And on the 27th of June, the business sold goods for €39,000 and received payment by check. And again, this is very similar to the transaction on the 12th of June. So you sold goods on credit. You sold goods and you received the payment by check. So with regards to a sales transaction, sales is income and income is always credited. So you go down to your sales account. We have already opened that account and you will put in your date, the 27th of June. you've received the check, so it's going to be the bank, and it's €39,000. Because you've received the money by check, you will be increasing your bank balance by that sales amount. You'll be debiting your bank balance €39,000. And that is that part of that question completed. And then finally, on the 30th of June, you've wages of €4,500, which were paid by check. So your wages are an expense. You open up a wages account. You'll always open up an account for each different type of expenditure classifications. So you have your wages account, your wages is an expense, you debit your expenses, so you'll debit your wages account. So the 30th of the 6th is paid by check, which is your bank, €4,500. And again, the opposite side of that will be your bank balance. When you're crediting your bank balance, you're always reducing the amount that's available in it, wages, 4,500. So there, at this stage, you have all 8 transactions entered in twice, and now you are in a position, so that is part A of the question. You've entered the transactions in the relevant ledger accounts, and now you have to balance off the T accounts. So starting at the top, if we close off our bank account, we can see that the total of the debit side is €274,000. And then in order to make the credit side equal the debit side, so the 30th of the 6th, you will have a balance carried down of 193,500, and that is your balancing entry in order to make your credit side equal the 274,000 as well. And then that balance carried down will become your balance brought down on the 1st of July. Balance brought down of 193,500, and that is your bank account closed off. Your capital account is straightforward. You've only one entry into it, so you will 30th of the 6th balance carried down 200,000. Close them off. So your debit side now equals your credit side, and then you will bring your balance carried down to the first day of the next financial period, 200,000. Likewise, your office furniture, even if you've only one entry in your account, you should always balance it off. Oops, that should have went there. Purchases account. The debit side is the largest one at 44,000. So you're going to close it off. Balance carried down. Always make sure to close off your accounts. Your sales, your last three, your sales account. The total of your sales is 74,000. So the 30th of the 6th, balance carried down 74. And you do you do the exact same with your other rent and wages accounts.